Hi, I am Iyyappan. I am having 22 years of experience in accounts and finance. Okay, now we are going to have about understanding the concept of the year-end close in the books of accounts. So it is a process by which analyzing the data which we are entered in the books of accounts. So one kind of reconciliation and verifying the transactions made during the financial year. From the reports, you can check from the reports through daybook, ledgers, and by way of final reports. Okay, so what are the process we have to be do for the year end closer? Okay, what are the things we have to be make sure? So company needs to make sure the process to post the provisions of expenses like rent, audit fees, electricity, income tax provisions, salary to staff. This kind of provision entries we have to make sure that March expenses need to be make a provision during the March itself, because due to year close we have to make a entry by provisions. Once it is paid during the April, we can close the provision in the next financial year. And another thing, checking month-wise expenses from the reports. So there should be no uniformity of the expenses. In case of any deviation, we have to make it correct it and have some justification on those expenses that need to be make sure. And another thing, we have to make a balance of all ledgers, general ledger, like expenses, revenue side, and in the balance sheet side, liabilities and assets. So in case of current liabilities, sundry creditors this side, and in case of any payable, outstanding liability, that ledgers need to be make a balance. And as per this asset side, so we have to balance of ledgers of current assets, sundry debtors, and other all those ledgers like prepaid expenses. This kind of ledgers we need to make balance and make sure the closing balance at the 31st March year end. Another thing, we have to, the main part of the business transaction, what the revenue we are generating through the, AR, accounts receivables, that is, sundry debtors and other kind of reconciliations. We have to make sure AR reconciliation. And the process of we are doing business based on the suppliers, what they are supplying goods to us, that is AP's reconciliation. That is only goods and other kind of services will be included in the APs. So that APs and AR reconciliation is main part of the business that need to be make sure the closing balance and get the closing balance certification and statement from those suppliers and the debtors. We have to have a closing balance confirmation statement from those parties for account closing purpose, and make sure that the correct balance should be recorded showing in the balance sheet in the books of accounts. And another thing, in case of trading concern, we have to have arrive the closing stock what we are lying in the godown or some trading areas. We have to make sure that the closing stock arrive the closing stocks and arrive the value on the basis of first in first out method. So, and another thing we have to make sure that cost should be cost price or market price, whichever is whichever is less. Okay, so that closing stock balance need to make sure that balance should be shown in the P&L and in the balance sheet asset side itself. So we have to make a list of the all closing stock in like a ledger, details in abstract. So that balance need to be certified by the owner itself, and we have to make sure that that auditor should be cross check with those statement of the closing stock. Another main part of the transaction, bank reconciliation part, that simply we called as BRS. That statement, whatever we are collecting statement from those banks, and along with that, which we are passed the entry in our books of accounts, that need to be reconciled. If in case of any deviation, we have to make it adjust in either both the side. Suppose in case of bank charges are debited in the bank, that need to be posted here. In case of check collection in either side not proceed in the bank or not cleared in the bank, that kind of adjustment we have to make a reconciliation statement, and need to be keep with the books of year-end close. So in case of TDS liability, that need to be make sure because 30th April we have to make payment of TDS applicability. So for related to provision of those expenses of audit fees or any kind of company secretary fees, those fees, professional fees, that need to be make a provision, and accordingly the TDS should be deducted and paid to the government. So the TDS ledgers need to be reconciled with the payable and paid. And another main thing in case of GST reconciliation, in case of GST filing, that reconciliation should be made with GSTR 2A and 2B. The thing, in case of some miss records has been found with the 2A and the 2B. So we are taking input on the basis of GSTR 2B. That reconciliation need to be make a comparison. What are the inputs which are not it's making misunderstanding between those reports, that need to be get the list of that we have to be rectified. And another thing, GSTR 2A 2B and with GSTR 3B, which input we have taken during the GSTR 3B filing. So in case of any difference, we have to be make sure at the March end year close. And another thing regarding the GST reconciliation, GSTR 1, that is outward sales we have filed in the GSTR 1 should be matched with the GSTR 3B. Now it is not an issue because whatever the GSTR file, it is automatically taken by the GSTR 3B. If in case any deviation, we have to be make it correct it during the March year end. And another thing regarding the GSTR, so input reconciliation, that is input ledgers, input credit ledgers, which we have to be download from the GST website based on our return filing. That should be reconciled with the duties and tax ledgers in our books. That balance of CGST, SGST and IGST should be matched with those GST input credit ledger and with our books of accounts. Another thing, we have an option of GST website, ITC comparison report. That comparison report we have to be download from the GST website and make to reconcile with our books of accounts. In case of RCM has been filed by our supplier, that need to be clearly shown in the comparison report. that RCM need to be paid, and we have to be get input of that RCM paid inputs. We can take input of those reconciliation also. We need to make sure of the GST return. Another thing, in case of GST payable and paid, that ledger also need to be reconciled. So it should be matched payable and paid to the government. So finally, after making provision and reconciliation, verification of accounts, the checking of GST input ledger, then we have to go for making the preparing of provisional books of accounts. That provisional books of accounts need to get checked by our owners, and finally we can make sure that provide to the auditors for further checking. In case of any omission in the records of provision or in books of accounts, we have to make sure that provision need to be updated. Another thing, after making the provision, we have to make the final books of accounts, P&L and balance sheet, and these need to be make a compare with our last year's statement. That ratio should be uniform. In case of any deviation, we have to make a justification. Maybe it's based on the market condition or economic condition. That need to be make a justification in the wordings. And finally, we have to make a prepare of cash flow statements. The cash flow inflow and statement, how the year outflow has made, either it is in a positive side or negative side. That needs to be make sure by preparing cash flow statement. And the ratio analysis, we have to prepare all the ratios like expenses ratios, current account, current assets, current liability ratios, and leverage ratios. These kind of ratios we have to be prepared and compare with those last years. This is a point I have stated in the above. If anything missing, you can add it in the comment section. Thank you.